Hello, everyone. Welcome, welcome. Guys, we'll get started shortly. Welcome, everyone. Welcome, everyone. Hey, Michael, welcome. Hey, Bill, welcome. Welcome, everyone. Welcome. Hey, Kawisi, welcome. Welcome, everyone. Hello, everyone. Welcome, welcome. All right. All right, guys. Welcome. Welcome, guys. This evening is a Q&A. So welcome, Michael. Hey, Bill. Hey, Kawisi. Welcome. Hey, guys. This is Q&A. All right. So as you guys know, on Mondays, we do Q&A. So this is your opportunity to ask any questions of the markets, whether it's on the markets, any trades that you guys are in, any symbols you want to take a look at, but anything in general but relating to trading. All right. So any questions for me out there? Any questions as we start? And we'll go over the markets also. Any questions? Any questions?
Sorry, I didn't know it was about Q&A. I thought this is for Forex trading.
Oh, Forex. Yeah, Forex, Michael, was yesterday. All right. Was
Yes.
yesterday. All right. But you're welcome. Welcome to stay and learn. Bill, are you still holding your positions, your yen positions?
Yeah, I got two of them right now. I got the Aussie dollar and the New Zealand dollar.
Oh, okay. You got into those today?
Yeah, I've been traveling all day, so I took your recommendation this morning and jumped in both of those this morning.
Oh, okay. We had a great day with the yen pairs.
Yeah, is that in a full rotation, David?
You know, Yeah, I guess, right? I guess it's a rotation. Um, you know, they're moving nicely, right? So we should be in them. I think we started trading those towards the end of I think was it Thursday, Wednesday or Thursday? We said to get in those. Yeah, I guess you can call it a rotation. If it's a rotation, Bill, we we missed calling it and kind of just got on. The market's been so funky, recently. So, um, yeah, yeah, yeah. So, well, you were in another pair, before
So I
Aussie
was
and
in
New
the
Zealand.
dollar pairs last week, and then we started when that started to rotate out, I got out of Swiss dollar.
Okay, yes.
That was the I think Thursday of last week. We got that big white candle
Mm-hmm.
and it started to sink quick.
Yeah. So we're
So I'm
totally out of the dollar pairs. We're totally,
totally out of the ball.
yeah, we're totally out of the dollar pairs.
Yep.
Um, so you in the Aussie and the New Zealand? Yeah,
Yes, sir.
those are the two. Okay. On what time frame? 60 or 240?
I did it on the 240 because I'm traveling this week.
Okay, okay, good, good, good. That's the way to do it. All right, that's the way to do it. Right? We've added the 60-minute, but yeah, when you're busy, when you're traveling, right? Yeah, put those on the 240 rather than the 60. And let's see here. You guys should see my screen here, my trading screen, the 240. So Aussie yen, and we got buy signals on these. So here's the buy signal moving up nicely. And then we hope we will get some more movement. Hey, Mary, welcome. Welcome, Mary. And then New Zealand. And I want to go through the yen pairs. Um, Bill, we'll go ahead and call that a rotation, right? We'll send that out and call it a rotation. Although we might be late in in it, but that's fine. Um, we were in it right last week, but as far as latest calling it. Um, New Zealand yen right here. So here's your order position. Nice, perfect break here on this resistance right here. Buy signal right here and moving higher. So good job with those. Yeah, hold those on the 240. The 30-minute, I'm sorry, the 60-minute right here. Here's New Zealand yen. All right, New Zealand yen. Um, and Bill, what you can do also is you can watch it. I wouldn't, you don't have to trade it on the 240, but you can you can watch it on the 60-minute. And here it is right now. Look at that. Buyers are coming in. This news, you guys see that moving up, prices moving up right now. So the Asian market
Yeah,
is, you see that, Bill?
yeah, that looks good.
Yeah, it looks really good. So the Asian market is opening up, and that New Zealand yen, that's part of that group, right? New Zealand, right? The Kiwi pairs, Aussie pairs. I'm sure Aussie yen is getting a move. Well, not yet, but yeah, that should break resistance. So really, really good trading in the yen pairs. Here's the 60-minute right here, all blue. That's what we want. And if you guys notice right here, solid. So Aussie, Kiwi, yen pair is solid. That's what we want on the 60 and on the 240. Yen pairs hit right here, solid, moving up. So good job. Mary, which pairs you were in? Are you still in your pairs, Mary? I just want to go over these yen pairs.
Yes, I'm still in my pairs. I have the yen CAD.
Okay, so CAD, okay, cool. So CAD yen, let's take a look at that. CAD yen, you were in that yesterday. So you got in. Good job on this one. You got in at the buy signal, right?
Probably up above that, slightly above the buy signal.
About right in here about
I got in at 107.78.
107.78.
Mm-hmm.
I thought you were low. 7. Right in here? You got in over here? No, because you got in.
No, no, no. Let's see.
Yeah, you got in lower than that.
Oh, no, no, sorry. 107.13.
That's what I thought. So 107.13 was about, yeah, right here. So you're really good in the trade. All right, good job. Good job.
The reason I'm quoting that number is that then I went back in and bought some more.
Okay, you added. So you added on the break of this resistance here.
Yes.
Okay. Okay. I wouldn't add any more. I wouldn't add
For
any.
you guys, what's the profit on that so far?
The P&L on this so far from the buy signal, Michael. That's about let's see here. Let's say 7, about a little over 160 pips or so. So roughly 150, 160%, but we go by pips. But this move here, Maria,
Mhm.
I wouldn't add any more. Okay. You're still new, remember?
I'm getting excited.
I
Now the
know.
other one is CHF.
Okay, so CHF JPY. CHF JPY. And your entry was near the buy signal right here, I'm assuming?
147.42.
147. Good job. 147 0.42.
Mm-hmm.
Oh, you got in early, did you? Okay, no, you did. You did good. Okay, yeah, right on the buy signal here. Okay, right. It pulled back a bit. That's why you got a better feel. Okay, it pulled back. Good job. Good job.
Then I've got the New Zealand.
New Zealand. Let me ask you, since we introduced the 60-minute, what time frame are you trading these on? The 60-minute or the 240?
I'm on the 240, but I was going to ask you about the 60-minute. I don't have it.
Oh, you don't, yeah, you don't have it. Now you can change it. Okay, so let me show you an easy way to change it on your chart. Okay, so right on your just click, right, left click on your screen and just type in 660 like I'm doing here, and it will change it to 60 minutes.
Oh, okay.
Okay, but we'll do the since we've formally formally starting trading the 60-minute permanently for now. All right. We'll do an update and we'll get those. Just get with me to set up a installation. Okay. But in the meantime, you can do 2 ways. So you can right click on the chart, go to time frames. All right. You could do 60-minute here. To go back to your 240 in the meantime, go to time frames, right click on your chart right here. A blank area. Don't click on your candles, right? Just find a blank area, clear area, right click, go to time frames, and then to go back to your 240, okay, go to customize. I'll show you. Go to customize, and then just type in here, just enter here 240, and then okay. All right, and then that will change it back. Okay, until we get everyone set up. Okay.
So I have one last pair.
Okay, good job.
The
Okay.
ZAR
Zayen.
Yes.
Okay. I think Zayen is the yeah, it's the biggest mover. When did you get into Zayen? Was that today or last week?
When did I get into that? Must have been, I think after you sent out one of those notices over
Okay,
the weekend, not over the weekend, probably Friday.
Friday. Do you remember the price? You have the price on your your
83.78.
83. Okay, Zayen, right?
Right.
It won't be 83. It'd be 8.8.
Oh, sorry, I'm reading the wrong one.
Okay. Yeah. Zayen.
8.21.
8.2. Okay, so you got in on the 240 then. Okay, so 8.21. Okay, so keep that on the 240. Okay, keep that on the 240. Good job. How many is that total? How many total pairs? 4 or that's 4?
Four.
3 or 4? Okay. I wouldn't take any more trades. Right? You remember last time with the dollar pairs, right? If they go against, you're right. Risk is good, right? When they're moving higher, but if they go against you, but they look good. They do, but anything can happen, right? Anything can happen. So I wouldn't do no more. Try about 3. If things are really moving, right? You could do 4, but I would no more, and don't scale up. Okay,
Actually,
remember.
there have been some pretty scary moments in the course of the day. So
Yeah. So this is your 3rd week, right? 3rd full week trading ever. So you're doing good, but you're being very patient. You're taking the trades, but I wouldn't trade anymore. So with this, don't scale up. Just watch them, and perhaps keep them on the 240 for now. Okay. If we see any change, then you could certainly start looking at the 60-minute, the hourly chart. Okay. I want to go over any questions on any of this so far or anything else. This is Q&A, so this is your time to ask questions, guys. Hey, Gerald, welcome.
Hey, David.
Hello. All right. Any questions? Any other questions? Okay, so
my questions would be kind of basic. I don't know if you want me to. I'm totally new at this stuff.
All right. What's your question, Michael?
Some of these South African currencies and all this, I'm definitely not familiar. So, if we could talk, like, what would be like the major or most commonly used pair?
Okay, that's a good question. And Michael, I would recommend also we have a beginners class, which is tomorrow. All right, so same time. So
Same time.
Come to that class also. We have a beginners class that we do
So would you cover like these platforms? I mean, I'm familiar with the bars, but it's from equity and option trading. But when it comes to currencies, the platform or how much risking how much and at a time and those type of basic questions, basic lessons.
In the beginners class.
Yeah.
Yeah, but I would recommend it. It's good. We go through some other items that I would definitely recommend it. And then we do classes throughout the week too. So hey Arthur, welcome. All right. So let's talk about that. When we trade, so you've never traded Forex before, Michael, I'm assuming.
No, just equities and options.
Equities and options. Okay. Well, yeah, we do all of those. But Forex is very popular. with our traders, and we use this system here called Monster Scalper. Um, there there are three different markets. All right, three different markets for Forex. So we have the Asian market, and let me show you here. So we have the Asian market, which is opening right now as we speak. All right.
Okay.
Yeah. All right. So this is Forex, right? Forex. So we have the Aussie right here, the Aussie pairs, so Australian pairs. Then we
Okay.
have the New Zealand pairs. Those are the positions Bill got in. So Aussie, New Zealand, and then the yen pair. So like the Japanese yen. Okay. So this group here, their market opens up at 7, 8 p.m. Eastern time. All right.
Yeah.
So we'll generally get movement. They move, Forex is a 24-hour market. All right. So
Okay.
never closes during the week. It opens Sunday at 5 p.m. Eastern time. Here's Zaire, 5 p.m. Eastern time, and closes at 5 p.m. Eastern time on Fridays. So Sunday to Friday. A little different from equities, right?
Yeah.
Yeah. And so traders love this market, right? The Forex market, very popular because we've got 24-hour trading. All right. And I mentioned the percentage, right? The pips, very, very, a lot of leverage. So we can do really, really well when things move. So the yen pairs, yen, Kiwi, the Kiwi, New Zealand, and Aussie, that's in the Asian market, right? So right now they're opening up. The next, the yen group, that's usually the most exciting group to trade. A lot of volatility, a lot of nice movements with the yen pairs. So that's a big group. The next big group are the dollar pairs. Okay, the dollar pairs.
USD. Okay.
Yeah, USD. All right, the dollar pairs. That market opens up at 8:30 a.m. Eastern time. All right. And we call that the London session, or the New York session. All right. All right. So it basically opens up an hour or so before the equity markets, the stock exchange open up. And then we've got a couple more down here. 1 second here. Hey Zaire. Welcome. And then we have the euro, right? So euro, right? The euro, and then the pound. Okay, so the British pound and the euro. And then these open up the euro. So it goes like this. So the Asian markets will open up here. So the Aussie, New Zealand, and yen will open up now. And then from there, the euro session or the London session, all right, will open up around 2, 3 a.m. All right. And then the British pound, they'll open up about like around 3, 4 around that time. All right. So what happens is that capital will flow. All right. Capital will start flowing in the evening. The London session that's the biggest market for Forex. Okay. So the most volatility that we see is 2, 3 o'clock in the morning, 4 o'clock in the morning. Okay. And then everything will flow in. The New York session is the last session. Okay.
Yeah.
Yeah. And then by noon, we are done. The market by noon, you guys will notice by noon, the volatility, even before then, by around 10, 11 a.m. Eastern time, the volume just basically dries, right? And then starts picking up again around
7 p.m.
Yeah. So it's a
even
24-hour
though
market.
the New York market is still open at noon, right? It's still open, isn't it? Till
Yes,
3:30 or whatever.
Yes.
Not this still the volatility kind of dies.
It dies. Yes.
Yeah.
Yes. Because you've got to think, right? So the Asian, because they're starting now.
Yeah.
So by the time, by the time it's 9, 10 a.m., that's their day's
Okay.
done. Their day's done.
Interesting.
Okay.
Okay.
It's so popular because the concern has always been with Forex traders, because a lot of the volatility is in early morning our time, 2, 3 o'clock in the morning, and it's really
Mhm.
tough to stay awake. All right. That's always been a concern for traders, having to
Yeah.
stay up, right?
Right.
To catch that volatility. So we have trading systems and such to help us. All right. You'll have traders. I don't know if traders are doing it as much anymore, but they would move to London, right? Literally pack up the family, move to London so
Oh,
that
I see.
they could be awake, during the day to trade, because it is such a big market. All your moves will start with in the London session. Okay. The nice thing about Forex is that, with stocks, and you notice, Michael, you have to look through so many stocks, right?
Right.
With Forex, this is it, right? And there are a few more
Okay.
symbols, but these are the symbols with the most that are most liquid. So we track about right here. Let's see here, 57, right? 57 pairs, but they're grouped. We group them, right? Because they all kind of run together. You see, all going up here together, right? Basically going down. The dollar pairs are going down. Yen pairs are going up. So we just track that group, and
I
then
see.
we get on board. All right. So
David,
So you're buying the first and selling the second, right? If I'm not mistaken.
yes.
Okay.
Yes.
David, I have a question.
Yes, Mary.
So what's like the longest time that a pair run on average? I mean, I guess they'll have different timelines, but it's a day, 2 days.
Well, based on the time frames, okay. So let's see here if we catch here as an example, on the 4-hour time frame, right? If we catch a trend like this is a decent one here, right? Expect, right? Now that's if we catch a trend and it holds the trend. They can always break down like here. We bought here on a break of resistance, sold on a support. Well, that's a short trade right here. But here was a longer trade. So here was 828 was a buy signal here, and then it closed on 914. All right. So that's about 2 weeks. That's a decent trade. Okay. On the forward time frame, Mary, forward time frame, I call that an extended swing trade, right? It's not quite a position trade like a day trade, a daily time frame rather. So a good 30 days. If we catch a nice trend, 30 days on the 240. All right. 2 weeks is great. Sometimes we'll get 3 weeks, right? Bill have seen some of those. All right. Zaire also. So I would say a week, 2 weeks, if we're really lucky, a month. All right. If we're really, really lucky, 2 weeks. I think that's the farthest I've seen it in recent months. All right. They can definitely go longer if things just really move. All right. The hourly time frame. Okay, the hourly time frame. So the 60-minute which is what we're adding now to the mix. All right. You could get a few days out of it, right? A few days. Definitely overnight is not, holding overnight is not a big deal. If it fails, we could close intraday. So within the day, if it fails, right, break support, we've got to get out. But I would say 3-4 days on the 60-minute So here it is right here. That's 6:13. I'm sorry, 10:13, and here we are, 10:18 right now, still running. That's a decent trade. If you can get a week, if you can get 3-4 days on a 1 hour time frame, you're doing well. You'll make some money. All right, you'll make some money. We will
Does
get
this
out.
have a stop loss, or what is she doing?
Yeah,
Trailing
so
stop?
yeah, Michael, we don't do stop losses. If you see,
Okay.
if you look here, all right, and the beginners class will be great for you because our trades are based on support and resistance.
But you're
Okay.
watching it then all the whole time.
Yes, yes, you
Okay.
have to, yeah, watch it or monitor it. Okay. So here's I'm not a fan of stop losses, right? The brokers will watch your stops and they'll run stops,
Right. Or trailing stop, any of those stops, right?
Yeah.
You're not doing any.
Yeah,
Okay.
they'll watch them. And so here we always buy when the price breaks resistance right here.
Okay. Yep.
All right, so that's our entry right here, and the system is giving us the buy signal here, and then we sell on a break of support. So yeah, you can't just let the system run. You have to, you have to watch it, right? It's your capital, it's your money.
Yeah.
Right.
Yeah.
So here was when we bought on a break of resistance. A lot of traders will put a stop loss, and this is why we don't put stop losses. Traders might put a stop loss, and it might be a percentage or fixed amount below there,
Correct.
and they might get stopped out, right?
Nice.
Stopped out here, and guess what? But you're still in the trade. So we buy on a break of resistance, sell on a break of support, bought on a break of resistance, sell on a break of support, bought on a break of resistance, sell on a break of support, and we'll wait. We'll wait, right? We call this the markdown phase. So we'll wait until the price breaks resistance again to get in. But I want to find an example here because I like that question, because I get we get that question a lot about support and putting stops and
It's
limit
just
orders.
the reason I bring it up is because if you have to do it manually, you tend to, your head, you get into your head games where you think, oh, it's not going to stop. It'll bounce back. And then next thing you
Eh,
know, it keeps going down. I say, okay, that's it. It's done. It's done going down. Now it's going to bounce back, and it doesn't. And it just, you kind of get into your head game.
Yeah, I want to show
So
you
how do how do you do that manual? That's hard to do manually,
it's hard
consistent.
to do it manual. So the way, if you're going to put a stop loss, right, you want to put it below support. Your support will always be your trigger.
Right.
All right, for exits.
Okay.
That's where sellers will come in. All right.
Yeah.
So just remember, sellers will always come in when the price breaks support. You have more sellers will come in
Right.
to push the price lower. So that's if you're going to put a stop loss, find a support area and put your stop loss below that. Okay. I'm
Okay.
trying to find a good example. Hold on.
What indicators are you showing here?
These
Moving
are all
averages or-
proprietary
Oh,
system. Yeah.
the red and the green.
Yeah.
Okay.
I'm gonna find. Hold on.
So that means you're not using profit target either, right? You just kind of let it go as long as it keeps going up.
Bingo. Bingo. Yeah.
Okay.
Yeah. So what will happen with profit targets? When we trade, we want small losses and big wins. All right. So most traders, myself included, when I started trading, it was very tough to stay in even profitable trades because you get some profit, you want to get out, you want to take profits.
Yeah,
But
2-to-1, 3-to-1, etc.
yeah. And 2-to-1, 3-to-1, yeah. But if you look here, the goal when we trade, and this is for everyone, right? the goal when we trade is to cut losses quickly, and then we want to stay in winning trades as long as possible. So so we're not tied to any particular trade. So here, just think of this is resistance here. Price is breaking resistance here, right? We got a buy signal, this blue arrow here. And then guess what? Sellers came in. We got a sell signal to get out. So we took a loss here. Okay, took a loss here. Then buyers came in again, the green candles here. We got a buy signal by the system. All right. We call this the markup phase. And then guess what? Sellers came in here, broke support. Red candles we got out here. So we took profits here. All right. So we had a
crossing over green. The green line is your buy signal, right?
Yep. Yeah. Okay. Crossing over that moving average. Yeah. Yeah.
And then crossing over the red line is your sell signal.
Basically. Yep. Absolutely.
Okay.
Absolutely.
Understand that.
Yeah, absolutely. So small loss, big wins.
Yeah.
Okay. And we keep going. So so the goal is, right, if we have a profit target, right, that might skew our performance. Okay. And then same here. All right. If you look here. So we bought here again. Right. So far we had one loss, so we're doing good. It's not always like that, but it broke resistance, right? Bought, broke support, right here. Not a really great support. Got out, small profit. Price is moving higher. Okay, so we keep going. So we keep going here. Our next trade here, and this is what I want to show you here. Our next trade here is we would have bought here. All right. Continuation of the trend. And then look here. The price made a high here, came back down. All right. Here is your support and resistance. Sellers came in, red candle. And then we got a sell signal. This white arrow right here is where we would have gotten out. Okay.
So, I mean, looking at hindsight, you could have gone short. You don't do shorts.
No. We do shorts, but it doesn't, you want to give give it a chance. This is risky. Trying to short this is insane.
Okay.
All right. We would have waited for the market to develop. We'll trade something else. So just because and that's a good question. Just because price goes down doesn't mean we're going to short it. Okay. Okay. Because the whole group now here, this might be a group. This might be a good short because the whole group. So we never trade in, in isolation. All right. We want to look at the trend of that whole market. So let's say the dollar market or the yen group, right?
Yeah.
Yeah. We want to trade the whole.
Yeah, that makes sense.
Otherwise you would be trading on emotion, right? Just randomly, just because the price moves. So we'll very seldom go from long to short right away. Right.
Okay.
Yeah. It has to develop. Yeah. Good question. Good job. Good question.
So it doesn't look like you care too much about fundamentals. I mean, you're not worrying about like GVP and trusts and her government and what's going on there.
Nope. It's all built into the price, right?
Okay.
It's all built into the price. So there is a reason why. There's a fundamental reason why it's going up, right? And then there's a fundamental reason why it's going down. It's all built in the price. Our goal is to get in, right? When the price breaks resistance, we'll know buyers are entering the market, and get out when the price breaks support. And
supply and demand, basic supply and demand.
Yeah, very simple. If you notice, and I can tell you've been trading, right? You've been trading. If you notice, and these are good questions for our newer traders, right? If you notice basic supply and demand, right? If you notice, Michael, we don't have any, we don't have RSI.
Yeah.
We don't have MACD.
Yeah.
We don't have we don't have stochastics.
No.
All right. We
I
really
don't see any studies in the bottom below the chart.
Yeah.
So I'm thinking, yeah.
Yeah. Very, very simple. We need support and resistance. We need that. We use the moving averages. We don't really need the moving averages, right? We don't really need them. We just use them for separation, to separate the buyers, the buyers here from the
Well, originally I thought this was like a volume weighted average,
Not even
equity
that.
was
It's
not
a
even that.
yeah, it's a simple moving average to separate the buyers from the seller. Just for the traders, it's easier for traders to like right here, green candles. Look here, green candles, right above the green moving average. We should be buying, and the system will only take buy signals. It will only give buy signals. All right. On the short system, where we'll be going short, it automatically turns that off. So it doesn't take any shorts. Here were the short signals. These red arrows are the short signals.
Oh, okay.
All right. So when we catch an uptrend, we call this the markup phase. We take this, we'll get buy signals, buy signals, buy signals. The short side will turn off. All right. And then when we get shorts, let me find if I can find a short. Horrible charts. See why we're not shorting this? This is not shortable.
Yeah, everything's going up. So
Yeah, this is not shortable at all. Look at that. That's why we're not trading that. And with that, this here, right? So the euro group. Look at that, everyone. See the euro. See this right here. That's why we're not in this. Look at that. Look at that, right? Right. Look at that. Compared to the yen pairs, what we're trading right now, right? Let's put this over here, right? Big, very, very different, very different, very different trading. All right. Good questions, Michael. Good questions. Yeah, come to the class tomorrow.
Okay.
I think you'll get some value out of the beginners class tomorrow. I know you're not a beginner, but
well, for this I am, Forex,
yeah,
currency pair.
Yeah. So I think you'll get some value out of that.
So
Okay.
David,
Yes, Mary.
what's the difference between trading on the 240 and the 60? And we have the same pairs, so what difference if I trade on one or the other?
Okay. So just understand that the time frames, the way I look at time frames, and I want traders to look at the time frames, is basically like Bill was saying, right? He's going to be out working. He doesn't have a lot of time to be able to watch his trades. So he's going to put it on a 240. So that's the first rule, right? If you base your time frame that you select on your time you have allotted for trading, and that can change, right? That can change, right?
So
but
I think of it like, if you don't mind, I think of it like, in the short term, 60 minutes, it's going to go up and down and move around all over the place. There's going to be a lot of noise. So when you put it on a 4-hour chart, all those movements, the short term movements are all taken out. And now you see the true trend on a 4-hour chart to see which way it's really moving, right? Because in the 60 minutes, sometimes it goes down quickly.
Yep.
But then over the next hour, it's going to come back up. The longer trend shows you where it's going. That's the way I try to think of it. But
yeah. So yeah, it's shorter. The 60-minute is shorter. The benefit of the 60-minute is that you can get in, so you can get in quicker on the move, right? And you can get out quicker.
Yeah.
Okay, so you can get in quicker. And Zaya mentioned that last night, right? You can get in quicker, get out quicker, capture profit. You could put in a larger trade too. So because you don't have a wider when it retraces, when it pulls back, right? With the 240, we've got to give it more room to move for the trade to move around, right? So your losses will be less, okay, but your profits will be less too, because you're not leaving it. What, we could get 400-500 pips, 600 pips on a forward time frame. We'll never get that on a 60-minute, right? We might get 150 pips, 200 pips. Well, we'll never get 400, 600 pips on a 60-minute time frame. But the way we want to look, I always for traders, because it's a 24-hour market, Mary. Okay, it's a 24-hour market. So like Michael was saying, right, you're gonna get some volatility, movement, some noise. So this trade right here on the 60-minute overnight might give a sell signal to get out, right? Overnight, this could form, we could get new support and resistance lines. Let me show you here. So overnight, I'm not saying it will happen, just as an example. So price could hold right here, build support and resistance in here like this, and overnight give a sell signal to close the trade here on the 60-minute. All right. Now, because Forex is a 24-hour market, guess what? You might be asleep. All right. So if you're not up, and we don't put stop losses, so if you're not up watching this, all right, guess what? In that overnight, it could do like this. All right. And you're not, you're not in it. You're not watching it to get out. All right. So it's going to move a lot quicker. Whereas the forward time frame, okay, so the same pair on the forward time frame, okay, where is it? Right here. Okay, that move that might give you a sell signal to get out. All right, on the 60-minute, all right, might look something like this. Might be just a smaller retracement on the 240. So let's say you bought here in the 240. That pullback on the 60-minute might look something like this, but it's not giving you a sell signal to get out. And then it might continue to do this right here. So where you might still be in the trade on the 240, right? All through the night, right? All through the night, right? Right? You might still hold it, keep you in the trade on the 240. On the 60, you've got to close it, right? You have to get out. So that's what Bill was saying, right? He's going to be busy. He can't watch it. He's going to trade it on the 240. All right. So rather than looking at it as, hey, I want to make a lot of money quicker, I want to get in quicker and get out quicker on the 60, think of it as more of your time. So rather than building your, and Arthur, I've talked with Arthur about this before, right? Set up the market, the time frame, so it works for you, not against you. So a lot of traders will trade a smaller time frame, right? Not realizing, like, and Arthur, you did that, right? You might trade a 2-minute time frame or 5-minute time frame, not realizing that if you trade on a 2-minute time frame or 5-minute time frame, you're gonna have to be there. You can't leave the screen. You're gonna have to be there to watch it. Okay, so
yeah, the time when I was doing the 1 minute and I was going to take a shower.
yeah, right. So that's the way I like to look at the time frames, right? And what Bill is doing is absolute perfect. You know, he's going to be traveling. He can't monitor it closely. He will still keep an eye on it. He can log in, right? Use any desk, log into his system, see how it's doing. Some of our traders have the alerts set up. Okay, you still, it's your money, right? It's your money. You can't just leave it unattended. But that's the way. If you've got vacation time or you're not at work, we have traders that trade full time. They can do that. They're there, they're watching it. So that's the way I like to look at it. Okay.
If there was one time frame, a universal one that you would say is most people would use, which one would you say that is?
Most traders, that's a good question, right? That's a good question. Traders, a lot of traders don't understand the time frames. Okay. So a lot of traders coming into trading don't understand how the time frame works. All right. Most traders come in and they trade the smaller mini time frames, which is a complete disaster. Okay, it usually doesn't work because we need the trends. We need to stay in the trends, stay in the trade to get. We need trends to make money to pay for our losses because we will have losses, and the goal is to have small losses, right, and have big wins because we need those big wins to pay for our small losses. Okay, so I want to talk about what traders what works really well. Okay, what works really well, and going back to what the institutions, the market makers, what they use a daily time frame. Yeah, they use a daily time frame, and I'm not saying that's what we need to use. Obviously, the daily time frame works really well, right? That's what traders do. Now, intraday, intraday, 5 minutes, right? 5 minutes with a daily. So a daily as your foundation, 5 minutes. Okay. The 1 hour works really well. Traders like once traders as far as Forex too. Once traders really get and they get very active trading, they like the 1 hour. 30 minutes, right? 30 minutes, but the 1 hour is what a lot of traders watch. Okay. The 240 works really well. Not a lot of traders like the 240, quite honestly. And I don't know why. It took me a while to get used to the 240. Okay. It took me a long years to get to the point where I'm okay with the 240. It's the waiting. That's what gets traders, the waiting. All right. Waiting and waiting. As traders, we have a certain mindset as traders, right? There's a reason that not everyone does this. Right. So for traders, it's hard to stay in the trade for 30 days or 2 weeks. All right. What's nice is, and that's why we're doing this now, and I'm happy we're bringing out the 60 minutes. Our traders, you guys have been able to do things behind the scene on your own, but having it now where we are doing both, right? Doing the 60 and the 240 is great because it gives you both. Okay. What we don't want to do is have just a ton of time frames. We have to pick a trading window. Okay. So when we take that trade, right? When we enter the trade, we need to enter, and Mary, this is good for you too, right? So when we enter on that time frame, we have to exit on that time frame. So whatever time frame we enter the trade, because we're going to enter that trade on a particular break of resistance, we need to exit on that same time frame. We can't go back and forth and back and forth and back and forth. Right? Can you do it? Yes, but guess what? It's going to mess you up, mess up your trade patterns, mess up your rhythm. All right, because you totally trend on different time frames. The way we use different time frames is, let's say we wanted to get in on the 240 here or get out here. We can zoom out. You guys we've talked about this, zooming out to a larger time frame for entry and zooming in. You can zoom in and out just for reference or for setting up your trades. Okay. So setting up your bigger support and resistance, perhaps on a daily. We've done it on a weekly time frame, right? We've gone as far back as a monthly time frame. All right. And then you can go smaller, 30, 15. I wouldn't do that a lot. I'd rather go, larger and then come back to your window. Always come back to your trading window. That's where you're going to be doing all of your work. all of your work, your buying, all your, you know, all your support and resistance will be on your trading window. All right. Does that help, Arthur?
Yes, thanks for that.
Mm-hmm. You're welcome. Okay. All right. Good questions. Any other questions? Any other questions?
So is there a pair that is good to start out with?
Was that Michael?
Is there a pair that it would be a good starting one, or is there no
A
such thing?
pair.
A pair of
Oh,
currency.
I'm
yeah.
glad you mentioned that. Okay. I'm glad you mentioned that. If you notice, we have a lot of pairs here. We
Mhm.
we have 57 pairs. A lot of traders have their favorite pairs. Okay. Pound dollar is a favorite. Down right here, pound dollar is a favorite pair. Okay. Euro dollar is a favorite pair. All right. We call those the majors. So which one? Euro, dollar CAD, right? Dollar CAD is a major pair. A lot of traders like the pound yen, so they have their favorite pairs. Okay. I don't have a favorite pair. I used to. I don't have a favorite pair. Why do you guys think I don't have a favorite pair? Or Michael, why do you think I don't have a favorite pair?
You're able to spot opportunities probably, so you don't have you just where the money is.
Yep. Bingo. Bingo. So let's say, for instance, my favorite pair is the pound. Let's say the pound dollar. Pound dollar is a very favorite pair, right? And guess what?
Not much happening.
Not much happening. Guess what? And it's the only pair I have on my screen, and you know we've all done it. I know I have, right? And guess what? Let's say right here it's stuck. Right here it is stuck, stuck
Yeah.
between support and
No
resistance.
volatility.
No volatility,
You want a lot of
nothing.
volatility. Yeah.
I can't trade. But you know what happens though? Because it's my only pair, I will force the trade.
Mm.
All
Oh,
right.
yeah.
So doesn't have any trading. It's stuck between support and resistance. And guess what? Because it's my only pair, right? Here's support right here. Here is resistance right here. Hasn't gone anywhere. Guess what? Because it's the only thing, right? It's like, you know, having one pair of shoes, right? You're just gonna wear that pair. You're gonna wear that pair out, right?
But it might be good for beginners, right?
No,
No?
no. Mary is trading with us. Mary just started, never traded before, right? Never traded before. Mary, is this your second full week or third full week trading?
This is my second week.
Second full week. Okay. So Michael, think about that. You've been trading, right? How many years, Michael, you've been trading? How many years total?
Oh, equities and options?
Yes.
10 years.
10
I mean,
years.
I haven't done well that long, but
Yeah. But yeah, 10 years. So
yeah,
think about this.
took a while.
Yeah. So think about this, right? This is her second full week trading.
Yeah.
All right. Check this. Now think about this. Her second full week trading. Now her first week, she had to close some trades. The dollar pairs kind of reversed, and she got out. Right? She got out. And now she is in Mary, which one? Give me the symbols again.
I mean, in a couple of yen pairs.
Which one?
ZAR N, I think.
Was it
I mean,
ZAR?
the card, the CHF,
CAD.
NZD, and the ZAR.
So she's in the, look here, Michael. She's in this one here. She got in about right here. Never traded before, ever, right? She's in this one here. Got in about right in here, right? And then ZAR. and she got in, I think about right in here. Okay. Even if the trades failed, look at her entries.
Mm-hmm.
Yeah. And
Yeah.
then look at her selection, right? As a new trader, right? So compared
Like
to,
ZAR, I would have never thought of as a trading currency.
yeah, yeah. And the reason why the ZAR, the reason why it's not by itself, right? It has that whole group,
Yeah.
that whole group, right? That whole group is moving. All right. That whole group is moving. And look at CAD. We track all the pair.
So
Go ahead.
trying to see that whole group is moving because it looks to me like people are just selling yens. Does that
Yeah,
make
if
sense?
yeah. If you look
Okay.
at the yen right here,
Yeah.
so we'll go to the
They're
futures.
dumping.
Yeah, so if we go to the futures market here, and we look at the yen, the Japanese yen, right here. Look at that, right here.
Oh yeah. Okay.
Yeah, yeah,
Uh, now that the group makes sense.
yeah. No, the group makes sense, right?
Yeah.
Yeah.
I like
So
it.
it's so much easier to take a new trader. Our goal, what our goal as traders, whether we knew, whether we've trading for a while, it's just be on the right side. It's so much easier, right?
Mhm.
Yeah, it's so much
Yeah.
easier to just be on the right side. Yeah, they're selling yen, and
So if you look at USD, it'll be completely the other way around now.
yeah, USD. Yeah, if you look at the USD, now it's pulled back a bit, right? But
Okay.
here, if you look at the USD right here, yeah,
Yeah.
yeah, yeah.
It's starting to make sense.
Mm-hmm. 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 Yeah. And it's just it's so much easier when we trade like this, trying to go, rather than going against the overall. And Forex, we'll have really good trends in Forex. Doesn't happen every day, right? But yeah.
So did I hear you say you're out of USD now, pretty much?
The pairs are the
Okay.
dollar, yeah. So the dollar index still has a buy signal, right? Here's our buy signal. It's still holding. It's pulled back a bit. It's
Yeah.
down right now. Equity markets are up, so all the e-minis are up. But
Yeah.
the pairs itself, yeah, they start giving sell signals to get out last week. So if you look here, right, they're red, see red and down,
Yeah.
right? So if we take a look at those, so here, right here, see, sellers are coming in. We got out here. We bought here, sold here. So let's see. See, they're breaking down. So they're breaking down. So we're out of those. So we got out of those, and then we started a new rotation with the a new move with the yen pairs. So got out here, and then at some point, the yen pairs will give us exit signals to get out, right? And then we'll find something else to trade. All right.
David, can I ask a question?
Yes. Awesome.
Speaking of not having favorites and spotting the opportunities, what do you recommend? Let's say at the start of the day, you notice a couple opportunities. Are you gonna pursue all of them, or the best ones? You're gonna limit it to one or two max, 2 to 3 max, or what's your recommendation for that?
Okay. So I want you guys, when you think about trading, all right, think of the risk. It's risky to trade. It's not easy. It's very hard, right? So we need help when we trade. We need a lot of help, but we need help from the market, right? And the type of help we need is by going with the flow, all right, of the market. Right? So we never want to go against what the market is doing. Okay. And I like to think of it like a river, right? A river. We never want to swim upstream. It's so much harder. It's almost impossible, right? To swim against the current. right? So we want to swim with the current. So rather than looking for an individual trade, right? Just like Michael just said, right? You know, well, the yen must be going down, right? And then the dollar could be going up, and we looked at it, right? So Arthur, rather than looking at individual trades, right? Look at what the environment of the market is doing, and then go closer, right? So start, you know, top down, top down, okay, not bottom up. All right. So I'm going to show you. So equities, if we took a look at equities, okay, and I'm gonna move this, I'm gonna change this chart right here, this time frame, because you're referring to stocks, right, Arthur?
Yeah.
Stocks, right? Okay. So good example, and then we'll end with this. Okay, we'll end with this. So if I wanted to trade stocks, right, I wouldn't start the day looking at individual stocks. All right. Right. I want to know what the condition of the market is. All right. The first thing is, what's the condition of the market? All right. Are we bullish? There are three ways the market can go, right? It can be bullish, moving up, bearish, moving down, all right? Or consolidating, it's moving sideways, right? So I need to know that. What's the condition of the overall market? All right? Before we take any trades. So I know overall, I know this is a weekly time frame. All right, but just as an example here, the market right now is in a markdown phase. It's very bearish. These are sellers, red candles. These are sellers, sellers. Here, sellers. Here, sellers, sellers. So the Dow, the S&P, NASDAQ, Russell. All right. So we know the market is bearish right now. Yes, we could have a move, right? Up one day, down the next, right? But overall, the market is bearish. All right. We're moving lower. All right. Look here. Look here. Not this is not my opinion. This is what the market is doing. All right. So we got lower. Here was a high. Right. Here is a lower high, and the lower high, and the lower high, and a lower high. It's moving lower. That's the Dow. And understand that a large percentage of the stocks out there will move with the indexes. Okay, 80–90% of your stocks will follow that same pattern. Okay, so that's the Dow. Okay, and you've got to do this every time, because if we do not, I said the market is risky, right? We swimming, all right, we're swimming upstream. All right, follow me, we'll be done. All right, so we have four major indexes: the Dow, the S&P, the NASDAQ, the Russell. They're all moving the same. That should tell us a lot. They're all moving down. That should tell us a lot. The VIX volatility index, which is here, right? If the VIX is above 20, that's very bearish for the market. So think of the VIX. As it goes up, these markets will come down. And guess what? It's going up. It's at 31. Ideally, we need it to be below 20, low teens, for the markets to become bullish. That's not happening. All right. So we got two strikes against us. All right. Two strikes against us. All right. So Arthur, I want you to think, I really want you to, even if you're going to trade $50, $100, $200, it doesn't matter. All right. We got to follow this process. So if we look here, right over here, this is why we have all these tools here. All right. If you look here, the VIX volatility index is up. That's not good. We need the VIX to be down. The NASDAQ, the Dow, the S&P, the Russell, they're all down. They're all down. They're all down. All right. The sectors. So the stocks, right? The stocks fit within the sector, like technology or biotech, right? All those stocks will fit in those sectors. But guess what? The sectors are down. All the big sectors are down. All right. Biotech is down. Home construction is down. Energy is the only one that's up, and it's not even doing well. Okay. Right now. Right. Materials, that's down. All right. Financials, that's down. Industrials, that's down. Technology is down. Consumer staples is down. Right. Real estate is down. Utilities, healthcare, consumer discretionary, telecom, transportation, they're all down. So the market is, the overall indexes are down. The VIX is up, right? All the sectors are down. Okay. We should not be trading. We should not be trading stocks. Not long anyway. Not long anyway. All right. Just looking here, just looking at this, watching this here, it's we can't even go further. We can't go further as far as picking a stock. I'm going to show you. I did this last week with some of the traders. Here we track 22, and I'm going to run a current scan. We track 22,000 stocks every day. Right? We track 22,000 stocks. This is our stock boss system with heat seeker forward traders. All right, Bill isn't here. Bill has 22,000 stocks. Mary, you have this system. 22,000 stocks every day. 22,000, and this is what came up. This is what came up, right? In Stock Boss. Bullmaster, we track the same thing, 22,000 stocks. This is what we have right now. Okay, I'm going to run a scan right now. All right, this is what we have right now. Normally we have page after page after page, okay? But look what we have here on the short side, the stocks that are falling, right? And I showed this last week. These are the stocks, right? So in what we should be buying in Heat Seeker, we've got 20 at the most, right? And look here. Look here. Look how many, look at this. Hold on one. All these stocks here, we have 90, I would say 80 to 90%, right? Of these stocks are falling rather than going higher. Now, if you wanted to short, yes, that's a different conversation, right? But not long, not buying, right? Not buying. Look at this. All these stocks are going down. That's the market. That's the market. So if we go long, if we try to buy stocks right now, we're going against, right? We're going against that current. And just like I said, it's so much easier when we're on the right side of the trade. Look at Mary, right? 2 weeks in the market, she's on the right side of the trade. Guess what? Her work is a lot easier, right? Just being on the right side, right? If we trade any of these stocks, doesn't matter how much we like that stock, right? Doesn't matter what the fundamentals are, it's gonna go down, right? Look at how many stocks that are down. Lots of stocks compared to the ones that are going up. Okay. Okay. So Artul, what's the message here?
We gotta make sure that we're looking at the top first, top down. So we want to look at the indexes to see what direction it's going. We want to have the VIX below 30 to know that that's when it's going up. Otherwise, it's going down. And we don't want to be going into trades when it's going down.
Yeah, but what's the
that's a
perhaps
trend.
what's the and Michael had mentioned it, right? He talked about my favorite, said, Dave, do you have a favorite pair? Right? And we use an example of the pound dollar. All right. The other thing too is this. We don't have a favorite market. Yes, we're buyers, right? We know we are biased to a particular market. I love the Forex market. But guess what? If Forex goes into a tight consolidation, all right, and everything dries up, and we'll know in Forex right here, we'll know, right, if these numbers here, 20 and above, means pairs are trending, they're breaking out, they're trending. Below 20 and red, right, they're consolidating. And we've had it where we only have 5 pairs that are in yellow that are moving. All the rest are in red. Guess what? We don't trade Forex. We don't trade it. We got to stay away. We've got to wait. All right, and vice versa. At some point, the equity markets will start to move higher, break resistance, give buy signals, and we've had it, right? All right, all these sectors here start turning up. All right, start breaking resistance. We have tons of stocks in here, all right, to trade, right? Well, the last rotation was biotech and technology, biotech and healthcare, and we'll catch it. So we don't have a favorite pair. We don't have a favorite symbol. We don't even have a favorite market. Whatever is moving, and there's always a bull market somewhere. All right? There's always a bull market somewhere. And if there isn't, we wait. We wait. We wait. All right? All right, guys.
Yeah.
All right. So thanks for coming this evening. We'll have another class tomorrow. So tomorrow is our Q&A. Michael, come to that class. Mary, you've been coming. Otto, you too. And then on Wednesday is trading in the zone, trading systems. We'll go more into the systems. So mindset, trading systems, and trend following. And then on Thursday, we'll do stocks, equities, and options. Okay. All right, guys. Thanks for coming. Thanks for coming, Michael. Welcome.
Thank you. Yep.
Welcome.
Thanks for answering all my
Right.
questions. That was a lot.
Yeah. Thanks. All right, guys. Thanks. Take care.
Okay.
Thanks, everyone. Thanks, David.
Bye-bye, guys.